Hi there, good morning. You've tuned into ET now, and this is Buy Now Sell Now with me, Shell D'Souza. Along with me, I have Somit Sarkar. A very good morning to you, Somit. And today, at least, is looking a bit brighter on the screen when it comes to the markets and the way how the markets are performing at this point in time. As you can see it on your screen, we are seeing some sort of a recovery kicking when it comes to the benchmark indices, or for the matter of fact, even the broader markets. Stellar recovery coming in for the broader markets from the day's lowest point or from the opening lows, to put it that way. So you have about 2% uptick from the day's lowest point, or excess of 2% for mid-cap index. Ditto coming in for small cap. I believe the recovery for small cap index from the day's low will be much more when you compare it to the mid-cap index. Almost 3% or so recovery coming in for the small cap index. Let's take a look at what the other list of stocks are doing at this point in time. Remember, ITC, that particular counter, saw a sharp rally in yesterday's trading session post that batter partial stake sale or a small stake sale coming in. Today, the stock is taking a bit easy in trade, is trading flat with a negative bias. Adani Enterprises, Adani Ports, they were major losers yesterday. Today, they are actually winning back, and you can see 5% up move on both of these counters. Hindalco, Hero MotoCorp, Coal India are the other set of gainers. While on the flip side, it is the steel counters that are taking it a bit easy. JSW Steel, Tata Steel are the top losers on the Nifty, with HDFC Bank, IndusInd Bank, Axis Bank that are in the negative territory. And on back of that, you also have the Nifty Bank that's still struggling to make that huge comeback that the rest of the market has witnessed. Advanced decline ratio very much better today compared to what it was yesterday. In fact, it's exactly the opposite of yesterday. You have it very much skewed in the favor of the gainers. While talking about the sectoral indices, except the Nifty Bank, just all the sectors are in the positive territory. You have power, PSU, oil and gas, all of them seeing good strength. So that's the way how the markets are looking like after what it saw yesterday. Today, it is trying to make some sort of a headway, but we have to wait and see if this one is sustainable or not. But remember, viewers, this is a show where we get you answers for all of your stock related queries. You can start writing to us on the WhatsApp number that'll be flashing on your screen. Do remember, each time you write to us, mention your name, the stock that you're looking to invest in, mention that name as well, along with the buy price and the quantity. In that way, our experts will be able to help you better. And talking about experts, today we have Kush Bora, who will be joining us on the technicals, while we have Mr. G. Chokalingam, who will be joining us on the fundamental side. A very good morning to you, Mr. Chokalingam, as well as Kush. Thank you so much for joining us on ET now. And let me kickstart taking all of the stock related query. And the first query that I have is coming in from Vincent. And Vincent wants to know, is it a right price to go ahead and buy Greaves Cotton for a long-term investment? And his long-term investment is for about 3 years or so. Mr. Chokalingam, do you think Greaves Cotton is a good bet that one can look at? We also know that they are making try a headway in the EV segment as well.
Good for long term. Short term, they have a problem in the EV business. But if he's a long term investor and willing to wait for more than a year, it's a good stock to buy.
Well, the next query is from Anjana from Kolkata, and it's on Waaree Renewables. She has invested and bought around 125 shares at a price of 1,340. She wants to know whether it's a good time to hold or buy more for 2 to 3 years horizon. What would be your view, Mr. Chokalingam?
Beg your pardon, which stock?
Waaree Renewables. Waaree Renewables.
I can't hear the stock name.
It's Waaree, W-A-R-E-E, Renewables.
Zuari.
Waaree, W-A-R-E-E.
No, sorry. I never analyzed this stock. Sorry.
Okay.
Kush, you have any view on Waaree Renewables? Because this one also has seen a spectacular rise, at least the way how the charts are showing right now. Do you think that it is peaked out, or do you see some more room for this one to head higher?
I mean, what a story, this stock has been. I mean, it's flying under the radar, and, it's been one of the highest gainers for the last, I think, 12 to 18 months or so. So, spectacular run already. My only hitch is that, the kind of volumes this share has and the kind of, move that it shows, which is from circuit to circuit, it just becomes very difficult to exit, when the going gets a little tough. Also, from a purely technical standpoint, there have been negative divergences that were clearly visible. So I think one should wait and watch. If you have an existing position, keep a stop loss at about 6,300 odd. For any fresh position, really, I don't recommend it just yet. And it's a trade to trade counter, so perhaps be a little watchful if you do enter.
Queries from NSS Lakshmi from Vijayawada. Now she has KPIT 400 shares and Radhiko Khaitan's 200 shares. She wants to know whether should she book profit at these levels or continue to hold. Mr. Chokalingam, what would be your view on both these counters?
Firmly believe that if both are a sell, their valuation comfort is not there in both Radico and KPIT.
All right, this one is coming from Bisaka, who is a small long-term investor who is a senior citizen as well with a vision of approximately 2 years or so. And Bisaka has 20 shares of Emphasis at a price of 2,094 rupees per share and also 30 shares of Tech Mahindra at a price point of around 1,098 rupees per share. Wants to know whether he should go ahead and book profit out of these counters, and if yes, at what levels? Or also, if you advise to book profits, then do you think Kotak Mahindra Bank is advisable or a good bet to look at, Kush?
Well, both these stocks can be sold. We've seen a bit of a slump potentially participate as well in the rally as well. So I think Emphasis, Tech Mahindra, not a bad idea to get out of both of them. Kotak Mahindra Bank for sure, certainly at the current setup looks attractive. So that's a good stock to enter into right now. And if they want to stay with the tech space, then Wipro is perhaps one stock they can consider. So perhaps split between Kotak Mahindra Bank and Wipro for the sums that are gained out of selling Emphasis and Tech Mahindra.
The next query is from Amrita from Gurgaon. She has 100 shares of Adani Enterprises bought at a price of 3,280 and 70 shares of Polycab bought at a price of 4,950. Kush, what are the near-term targets on both these counters?
So Adani Enterprises, I think, can make a sharp recovery. It can make a sharp comeback. The first target, incidentally, does come at about 3,250 from a positional standpoint, and once that is taken out, we're looking at a level of 3,400. So Adani, could see. We know this counter is known for a bit of volatility, so it could see a bit of a sharp rebound as well going forward. However, I suggest a strict stop loss at 2,900, which is a strong medium-term support zone for Adani Enterprises. As far as Polycab goes, I think there isn't too much to worry here. Then 4750 should act as your stop loss. And on the way up, we're looking at the level of 4950 as the first target. And once that is taken out, maybe 5100 also will serve as the second target on Polycab.
From Ashish, she's writing to us from Mumbai, and he wants to know about RITES as well as NALCO, both of these counters, whether it's advisable to buy these counters and at what price, and also fundamentally, are they good bets right now? What's your take, Mr. Chokalingam, on both of them, RITES as well as NALCO? RITES, given the fact that we've already seen the PSU rally take place, all of these stocks have corrected and now consolidating, while NALCO, on the other hand, is also seeing some sort of a correction creep in. And let's not forget, it's also dependent on what happens globally in the commodity cycle, isn't it?
Yeah, completely agree with you. European economy is struggling to show any growth, and also many small economies are struggling, which is negative for metal companies. So if he's a long-term investor willing to wait for minimum 2 to 3 years, then he can hold NALCO. Same with RITES for different reason. Valuation is already discounted for next 1 or 2 years. So therefore, if he's a long-term investor, he can hold both. Otherwise, in the short term, both are fully priced.
If he has to buy, do you think right now is the right time to buy these counters, because he's contemplating on investing in them right now?
He can wait till March 30th and see whether the recovery we saw today is able to sustain. In case it cracks, then definitely he can buy. Otherwise, he can wait till March 30th.
The next query is from Smita Vikram, and she wants to know whether it's a good time or a right time to buy Tata Motors at a level of 968 for short-term. Coach, what is your view here?
Looks like that. We've been bullish on Tata Motors for a while, and the stock has actually sort of moved up as well. So any kind of dip in Tata Motors is actually a buying opportunity. The stock is actually taking support at the 20-day moving average, or at least attempting to. I think this should hold. So positionally, I think 940 will act as a stop loss, and on the upside, 1010, and once that is taken out, 1060 should act as your near-term target from Tata Motors.
All right, on that note, we'll actually slip into a break on this edition of Buy Now Sell Now. When we come back, we'll continue taking your query, viewers, so don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now. Let's continue taking all of your stock-related queries. The first query is, the next query is coming in from Thomas. He's writing to us from Kerala, and he has 1,000 shares of Patel Engineering at a price of about 73 rupees per share. He wants to know whether he should exit this counter right now or continue to stay put with it. What's your take coming in on Patel Engineering? Kush, do you think it's a stock that one should stay put for a longer term? He's anyways making losses in it.
Yeah, I think the stock's already testing the 200-day moving average. It's attempting a rebound. I would suggest a positional stop loss at about 50. If that level is taken out, it could see, a much more, lower levels. The bounce that we're seeing today is on two counts. One, the 200-day moving average support, and two, the oversold territory that the stock had gone into. It's attempting a rebound from there. So my suggestion would be keep a trailing stop loss, keep a stop loss at 50. At every rise, keep exiting partially. The 73 level might take some time to perhaps come again. So keep exiting at all rise.
Queries from Yashri Bhattji from Vadodara, and she's asking Mr. Chokhalingam for a multi-bagger, medium price multi-bagger stock like you had suggested Nesco earlier. So any suggestion on that front?
I may be wrong, but I firmly believe that Bombay Burma is a multi-bagger stock potentially. Of course, the investor has to take own risk. Personally, also we have invested quite aggressively. I believe because it's having about 80% discount to holding value of Britannia shares, which is surprising. Now, Go Air is shut down, and the management has written off everything towards Go Air, and they also said they are not going to invest anymore in Go Air. And also Wallace Brothers, who are outside the promoter group, now they have become part of promoters group. I believe that there is a possibility of governance issue would improve. So considering all that, I believe that this can be a possibly solid multi-bagger.
This one is coming from Devashish from Kolkata. This one also is for you, Mr. Chokhalingam. He wants to know about oil exploration companies. He wants to invest in these counters. Wants to know whether ONGC and Oil India have a good risk reward in the longer term horizon, say about for 3 to 5 years.
ONGC could be a better bet than Oil India because still world economy, except US, is struggling, which is negative for oil prices. And also oil prices still down 15% from 6 months high. So ONGC could be a better bet.
Next query is from Sunita Rai from Bangalore, and it's for you, Kush. She wants to know the best level to enter in IREDA.
It's been last couple of days that we've been getting a lot of queries on this one. Very limited data, but my suggestion is that hold on for some time to reach the first day that the stock's attempting a rebound. A strong support zone comes in at about 110 to 115 zone. So if the stock does reach that level and attempts a rebound, then perhaps you could consider buying. Currently, the stock is in a bit of a downturn. Today's day could perhaps be a dead cat bounce. So 110 to 115 is the level that you could look at for any kind of fresh entry.
IREDA is not the only stock that we get a lot of queries on. We also get a lot of queries on defense PSU counters. We have Sudarshana, who's already invested in HAL, BEL as well as BDL. That's Bharat Dynamics. So HAL, the buy price is around 2,980 rupees. BEL, the buy price is 188. While for Bharat Dynamics is around 1,716 rupees per share. As you can see it on your screen for HL, she is making good set of profits, and I believe for the other counters as well, the profit is already made. Right now, Mr. Chokhalingam, she wants to know, should she go ahead and buy some more in the current dip for the longer term? She wants to invest in or rather stay invested in these counters for the next 5 years.
Yeah, for next 5 years, one can definitely hold on and also can invest. But as I said, I am a little nervous on the entire small and mid cap space. Though it has recovered today, I am not very confident whether it can be sustained. So therefore, to make fresh investment in defense and PSU, one can wait for at least another 2 weeks and see whether market gives once again opportunity like yesterday.
Well, the next query is coming from Vaishnavi from Chennai, and it's for you, Kush. She already has Gabriel India in her portfolio. What is the target price? Should she continue to hold this counter or sell right now?
Well, the stock's actually below its 200-day moving average, and there is very little sign of any kind of recovery. I mean, I know there's a sharp move today, but even that has not been able to break the 200-day moving average. So my suggestion would be keep a stop loss at about 285, 290 kind of levels. If they're taken out once again, the stock could be in for a deeper correction. So no further additions here. Hold with a stop loss of about 290. If that is taken out, it's best to exit Gabriel India.
Right, this next one is for you, Kush. This one is coming in from a student who is writing to us from Kalyan. His name is Kunal, and he has 20 shares of Birlasoft, which he purchased at a level of 487 rupees per share. He's saying that he is sitting on the profits of approximately 55 odd percent or so. Should he actually look to book profits? And if yes, then which is the other stock that he should look to invest this money in?
First up, congratulations on starting the journey so early and playing it right by riding the profits. Most investors, at least the early ones, don't do that. So congratulations on that. On the whole, Birlasoft doesn't look so bad on the charts. The near-term correction is just market linked. Otherwise, the stock's actually on a very strong footing. What he can do is perhaps, as I suggested earlier, book partially, at these levels because the profit's pretty neat, and shift to a large cap, which could either be Wipro or HCL Tech. He can take his pick. We prefer Wipro slightly more over HCL Tech currently. So that will be the suggestion that book partially and move towards the large cap names, preferably Wipro.
Next query is from Anil Kumar Bhalla, and he's a senior citizen from Jalandhar, and it's for you, Mr. Chokhalingam. It's on 3 counters: LT Foods, BEL, and NMDC. LT Foods bought around 1200 shares at around price of 206. BEL bought 4500 shares at a price of 185, and NMDC 10,000 shares at 122 rupees. He can hold all 3 counters for long term. What would be your advice for all these 3 counters? That is LT Foods, BEL, and NMDC.
In my research view, NMDC and LT Food both are good sell now. BEL is a good to hold for long term.
All right, with that, let's slip into a break in this edition of Buy Now, Sell Now. When we come back, most stock queries on the other side. Don't go anywhere.
Welcome back. You're watching Buy Now Sell Now. The first query post the break is from Samya from Kolkata, and he has bought Mazgaon Dock at a price of 2,259. Given the fact that we have seen a sharp drop in the share prices, Kush, what is your view here? Should he continue to hold this counter? Could there be a bounce back?
There is for sure a possibility. 1800 is a strong support zone, and the stock's gone in the oversold territory, so there could be a rebound back up until 1950, 2000 odd levels. From there on, it remains to be seen whether it's sustainable or not. But from these levels, there is a rebound that the stock could attempt.
All right, this next one is coming from Mr. K. Parthasarathy, who's a senior citizen from Chennai, and he wants a technical as well as fundamental view on IDFC. 400 shares bought at 120 rupees per share, and IDFC First Bank 100 shares bought at 54 rupees per share. He wants to know whether he can stay put with these counters or look to exit out of them. He's saying the stocks are falling continuously, and his view is just for 12 to 18 months. So let me take your view instead, Kush, on both of these counters. Should one be perturbed with this fall that both IDFC and IDFC First Bank is witnessing, and for the next 12 to 18 months, is it advisable to stay put?
My concern is that the stocks actually been falling, at least IDFC and IDFC Bank both, rather IDFC First, both have been falling even before the market slump started recently. Both these stocks, at least IDFC is just below his buying price, so not a bad idea to sell on rise. The stock could very well attempt the 120 kind of a level, and that should be a good level to exit at for IDFC. IDFC First Bank too, the stock has actually made a peak somewhere in September and slipping further. So not a bad idea to perhaps exit both these names, switch to he may or may not like it, but something like a HDFC Bank and Kotak Mahindra Bank, if he's looking particularly in the banking space.
Well, the next query is from Imran Alam, and he's from Kolkata, and it's for you, Mr. Chokhalingam. So he wants to invest in Vodafone Idea given the fact that the company is looking to do a fundraise. So do you think it would be a right time to enter Vodafone Idea, keeping fundraise a potential, given the fact that the company is looking to do a fundraise?
Fundamentally, certainly no. But again, there is a risk of following my idea because all such single-digit, double-digit stocks without fundamental reason, they flare up. So if he is willing to take an enormous risk, he can buy. Fundamentally sell only because the equity base is already more than the annualized revenue. And if it has to survive, either it has to borrow more money or it has to dilute the equity. Either case, the EPS will become in few paisa on annualized basis, which would be highly elevated valuation for the stock at current price. So fundamentally, it's a great sell.
All right. This one is come from Pushkar Saxena, and this one is on Bosch. He has 4 shares at a price of around 12,600 odd rupees. He wants to know about the upward journey from legacy point of view. And talking about the legacy point of view, then Mr. Chokalingam, what's your take coming in on Bosch, given the fact that this one is a stellar company in the auto ink space as well? What's your take coming in on this one?
He's willing to wait for 3 to 5 years. Even at this price, one can hold Bosch.
Well, the next query is for you, Kush, and he's asking some good, actually mid-cap names that you would suggest. It's from Vivek. Actually, he's asking for some mid-cap names that you would suggest, 1-2 names on a short-term basis. Given the fact that we are seeing a recovery now, any mid-cap names on your radar?
So, very pertinent query. It's just that, the decision should not be made on the recovery that we are seeing just today, because, this could very well be unsustainable. But I like the idea that, when the markets are down, someone's actually looking to enter, at the corrected levels. The couple of stocks that we have on our radar, one of them is Power Mech. This stock had done, had moved, had a stellar move and then consolidating. So I think Power Mech is one stock, that should be on their radar. The other one is CAMS. This stock also has a lot of potential. Seen a bit of a run up, now coming closer to support zone. So I will have CAMS and Power Mech on my radar. And if they're willing, then Siemens. This is one of our top pick from a medium term to a long term perspective as well. So these are the 3 stocks that I'll have on my radar. And the first 2 have actually dipped, so quite a good entry point. Siemens, even without the dip, does look like a very interesting buy.
Coming to you, this one from Sayak from Bangalore, and he believes as he's entered the following stocks at the wrong time. It's 50 shares of KPIT at a price of 1,583. He also has entered Keynes Tech at a price of 2,944. Dynamatics at 7,078. Out of these 3 stocks, give your views on two of them, and what should he do with them? Book losses or average at this point in time, though you are not a fan of averaging. I'll just repeat the stock names. One is KPIT Tech, the other one is Keynes Technology, and is Dynamatic.
So I think the 2 stocks from our perspective that he could continue to hold very clearly are KPIT and Keynes. Both these stocks are consolidating, and the fall that we have seen has only been because of the market fall that came about. So KPIT is a hold, Keynes is a hold, and as you rightly said, not a big fan of averaging. And currently there is no real reason to suggest that these stocks have actually made a near-term bottom. So you should go out and average. So I would just hold on to both these stocks. A positional stop loss for KPIT comes in at about 1,300, and the same for Keynes comes to about 2,600 odd levels. So I would suggest hold on. These are slightly deeper positional stop losses. The only reason I'm not suggesting averaging is because it doesn't look like the near-term bottom is in place, but for sure they can continue to hold.
The next query is from Swati. She's a new investor and with a long-term view. She currently has Senco Gold, Welspun Corp and IIFL in her portfolio. At portfolio level, she's having a loss of around 10% odd. Mr. Chokhalingam, should she continue to hold all the 3 counters currently?
It's always better for new investors to start with either mutual fund or at least couple of large cap stocks. Never put 100% in small cap to start. Of course, if you can lose money, you can learn a lot in the market. That is the way people like us have come to the market in 90s. Now coming back to these stocks, I'm sorry, I studied them. I do not have any valuation comfort in any of them.
All right, this next one coming in from Alex, who's writing to us from Pune. Kush, he has 15 shares of Vandala at a price of 902 and IRCTC at a price of 950 rupees per share. How are both of these counters looking on the charts to you? For Vandala, he's making a mild bit of losses. IRCTC as well, he's making a mild bit of losses right now.
So again, both these stocks are into a longish consolidation phase. If you see, the peak was made somewhere close to December or early Jan. So my suggestion is, hold on. The good thing is that they haven't even given away as much, and given that his buying, they're very close to his buying price. Although there's a bit of a loss, the fact that he bought it a little lower and is not seeing very deep cuts is actually a healthy sign. So you can continue to hold on to both of them. A positional stop loss in Wonderla comes in at about 820. and IRCTC also, a positional stop loss is at about 850 kind of levels. Both these stocks are consolidating. I think any kind of support from the market, and he could see a bit of a bump up and a rebound. So exit at cost or maybe at mild profit, is perhaps possible in both these names.
Queries from Mr. Subramaniam from Chennai. Now he has 3 shares in his portfolio: Federal Bank, HFCL, and NBCC. At a portfolio level, he's making a profit of around 35 odd %. Mr. Chokhalingam, should he continue to hold these counters and in fact consider entering at lower levels, or should he go ahead and sell and book profits?
He can hold a Federal Bank. In fact, he can even buy now. It's a quality stock. There are some issues, but this bank will overcome. Nearly 100-year-old bank. Other 2 stocks, if there is any recovery, he can sell them.
All right. This one's coming from Puneet. I don't think you tracked this one, or maybe you have limited data on this one. Khush, it's Happy Forgings, recently listed IPO. 850 is the buy price for our viewer Puneet. He just bought it at the IPO. He wants to know whether he can hold on for it for a month, and he wants a target for a month.
So, as you rightly said, in a very limited data, if I just look at it from an hourly chart perspective, the stock's been in a bit of a downturn. It's gone into an oversold territory, so a rebound is possible. And 850, that's his buying price. So, a suggestion would be to keep a stop loss at 810. Exit when the stock comes to the buying price, because there could be strong selling pressure at every rise. So 810 is the stop loss, and an exit close to the buying price is that seems like a prudent strategy at the moment.
The next query is from Vivek, and it's for you, Mr. Chokhalingam sir. 5 years back, he's saying that you had suggested Cochin Shipyard and it has done well, so he continues to hold that. He's asking when whether he should buy or hold or buy any other defense stocks like BL or Hindustan Aeronautics at this moment.
If he's holding, he can hold, but otherwise, PSU defense stocks, I would suggest wait for 2-3 weeks. I still believe market might see some corrections. That could be the best way to accumulate such stocks.
Next one is coming in from Vidya, who's writing to us from Bangalore. For a 3-year period, Mr. Chokhalingam, is it advisable to go ahead and invest the money in Infibeam Avenues?
I studied Infibeam. I may be wrong. The kind of expenses and purchase of goods when I see, I don't have much confidence. So I would not recommend buy on Infibeam.
Well, with that, let's slip into a short break and we'll address more investor queries post that.
Welcome back. You're watching Buy Now Sell Now on ET Now, and let's continue taking your query. This one is coming from Mohan Gidwani. He's writing to us from Dubai. He has a couple of stocks that he's holding on in his portfolio, and just because of paucity of time, let me just take one of them, and that is IEX. 1400 shares at a price of 143 rupees per share. He wants to know for the long term. His long term is 1 year, which actually means there's a short to medium term view. So Kush, let me come to you. What's your take on IEX? He's making mild losses. Looks like he entered at the right time, given the fact the stock had already seen a sharp correction, isn't it?
Oh, absolutely. But, hasn't really been an encouraging move thereafter. And, like most stocks that we've discussed today, even this is attempting a rebound after a sharp fall. So I would suggest a stop loss at about, 133 kind of levels if that is taken out, exit. But the stock could, take a rebound from here. We are seeing some mild, volume upticks also in this. So suggestion would be to hold with a tight stop loss at 133. At rebound, exit at cost price. That is perhaps the best bet, that we can suggest at the moment.
The next query is from Gayatri from Trichy, and it's for you, Kush. She's currently incurring losses on 3 counters: PNB, Piramal Enterprises, and Jindal SAW. Should she continue to hold these 3 counters or just book losses here?
PNB is something that can be held. Doesn't really seem like too much of a bother here. 115 is a positional stop loss. PEL is one stock, that really hasn't really done wonders. So I think PEL is one stock, that she can exit. And the other one was Jindal SAW. Well, this stock had actually moved quite a bit, 200-day moving average support. So continue to hold. There could be a rebound on this one. So PNB and Jindal SAW are a hold, and PEL is an exit.
All Right, with that we actually come to the end of this edition of Buy Now Sell Now. Thank you so much Mr. Chokkalingam as well as Kush for answering all of the stock related queries. In fact, we've accommodated a lot of queries in this entire 1 hour, and it's a good buy actually from Somit, myself and the team that put the show together. But before we wind down on this edition of actually Buy Now Sell Now, Sundaram Mutual presents Wealth Creators SIP edition Nivesh Day, and today we will unravel the debate between lump sum and SIP investing, providing clarity on which approach suits your investment goals better.
If you like this video, then like, share and subscribe to ET Now.